The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. Friday morning. We got about 24 minutes to go until the start of trading, and you got markets in positive territory kicking things off. We've given back some of those gains, though, since we got the jobs number just about 35 minutes ago. We'll jump into that in a moment. We'll do the markets first. Right now, you're looking at an S&P. We're positive by 9 points, but boy, you look at the sell-off yesterday, man. Trading at 45.40. Yes, you were technically positive by 9 points, but that's only because you closed yesterday basically at session lows. You look at the S&P, we trade not basically, I'll get that word out of my vocabulary. We trade from 4,600 yesterday, we'll call it, down to about 45.30. So yes, we are positive by 10 points, but all things considered, right near the lower boundary of where we were towards the close of action yesterday. NASDAQ 100, pretty similar action. We got a strong jobs number, man, but a strong jobs number just means the Fed might be coming with 50 basis points as was expected. Seems like that's the take right out of the gate. We jump to notes and bonds. We usually take them later, but there's your little drop off. We got lower price and higher yield coming at you right now. You jump over to the yields on the 10-year. We're talking about 2.42%, just like that, as you accelerate to higher yields on the thought that we have a very, very strong job market, folks, that the Fed's got to get control of. Inflation. That's what they got to get control of. Let's jump over to the headline right now. 431,000. That's the March payroll from non-farm payroll numbers. We also saw a revision of 95,000 for the previous month. The expectation was about 490. So you add the revision in there, it's a beat. Jobless rate, 3.6% is the unemployment rate there. Wages on a monthly basis, 0.4% was the wage growth on a monthly basis. You had a 0.1% rise in February, but the 0.4% wages really getting a lot of attention, probably rightfully so. 0.4% as expected. So pretty much as expected is how the numbers come in here. One tidbit I saw in here from Bloomberg as they're talking about different takes on the action there. Let me slide to where people working remotely, sliding down. Here we go. Share of people working remotely dropped to 10% from 13% in February. So that slide is still happening, right? More offices opening back up, calling people back, really remarkable. We are in April of 2022. This started in March of 2020, and still you're seeing the slide back to what we're going to find is a new normal. Where that new normal is, we're not sure, but we're not there yet. I mean, 3% is quite a number from February to March. But boy, we were dealing with some big Omicron variant stuff happening during February. You come into March, that's over, maybe bringing people back to the workforce. So we're now at remote 10% versus remote 13%, only 1 month prior. Unemployment rate, 3.6%. There's a lot to get into in there. Jobless, getting into the numbers. Now, the previous month was quite a number, and we revised it upward to 678,000. Non-farm payrolls, 431, upwardly revised 750 in February. So that's where you get the upward revision. This graph probably not including the upward revision. Yes, revised up from 678. So we get 750 last month. We got 431 this month. There's going to be some volatility there. 490 was the expectation. 3.7% was the unemployment rate. We come in basically at a beat because you add up the jobs that we were expecting, and we're higher than 490 when you include the revision. You get the unemployment rate lower at 3.6%. You have wage gains. There you go, 0.44% on a monthly basis. And keep your eyes on the monthly numbers, folks. Our man Kevin Hincks has stated it many times coming into these economic numbers. We already know 11 out of the 12 months that are going to contribute to the yearly number. Okay, well, the only thing we didn't know is what was going to happen in March. You compare that to the expectation. It's as expected. On a yearly basis, decent wage growth, 5.6%. When you got CPI running at 8%, though, that's a negative real return, folks, on the dollar that you're making. That is the most since May of 2020, though, on that number. But as they point out, however, inflation highest since the 80s. So we got highest wage growth since May of 2020, and we got the highest inflation since 42 years ago. Outpacing wage growth is as they put it. Labor force participation rate edged higher, 62.4%. And the rate for so-called prime age workers, 2-year high. People coming back into the workforce in this strong labor market. That's the take out of the gate, I would say, which is going to lead to the fact that all expectations are 50 basis points at the next meeting. This shouldn't do anything to put anything of brakes on that at all. All right, now, where do we go from there? Let's jump around to some of the other headlines. We're going to stay on inflation. Eurozone? Boy, they're ahead of what they're linking about. Eurozone inflation tops estimates, new record on war and everything else, right? March consumer prices in the Eurozone, 7.5% from a year ago. They were only looking for 6.7. Overshoots in Spain and Germany spurred rate hike bets. So they're dealing with it across Europe as well. Interesting to see how this will break down. Euro area inflation accelerated more than anticipated last month. Energy. That is quite an acceleration, to say the least. But you look at everything else. Food, alcohol, tobacco, 5%. Services, 2.7%. Big numbers across the board there. And look at that rise, man. You're talking about from 0 to 7.5. Now, core, okay, in Europe, it's a different story. Our core is not at 3%, folks. Our core is much higher than 3%. Europe really getting accelerated on the energy front. We'll see, though, in terms of we've seen our core's inflation numbers be pretty hot. We'll see if 3% is where it stops. I imagine it's not. Maybe Europe's a little bit behind the curve in terms of where our inflation has gone. But nonetheless, Euro inflation in a big way. All right, what else we got going on? Let's jump around to some of the stocks. We're going to jump to some meme stocks to start it off. You don't have to be a $3,000 stock to split, folks. All you got to do is be a meme stock. GameStop at 166 comes out and says, hey, guess what? Maybe $166 is too much money for the retail traders that we want to court, and we're going to consider a stock split. And the market says, I love that idea. We're going to trade above 200. We're back to 190. Now, here's what I'll say. You take a look at GameStop. This is like quite a stock like none other. The hysteria begins January last year. You got 483 as the high. You got 348.50 as the high. You got 344.66 as the high. Since then, we've trickled off. You did get above that 200 on the flash high. We're going to put this back on a daily to see the acceleration. Now, today, we're going to open at about 190. So we're back above that trend channel line. If we're talking about lower prices coming at you, it's quite a run, folks. The management at GameStop, they are fully embracing the meme mentality, splitting their stock at 166. So I believe it comes out that they want, they want 1 billion shares from 300 million is what they want for the ability to approve a boost in the number of shares outstanding in order to enable that stock split. I mean, maybe they're even going to go 3 for 1. I don't know, but they only got 300 million shares. They want 1 billion shares outstanding. Yeah, you could go 10 for 3, essentially, if you really wanted to. Nonetheless, they're higher. You jump over to some of the other stocks in the meme world. AMC, as we come into the first break, you're up a bit with the market as well. Whoops, no settings. Let's put it back on the 15-minute. They catch a bid as well on that news. Just remarkable, right? Up to 26.25. Let's jump to some of the others. Bed Bath & Beyond. They always catch a little bit of it. Look at these stocks. Anytime one does something, I mean, folks, that is from $22.50 up to $24. That's $1.50 on a $22 stock. That is a monumental move any other time. All right, folks, stay tuned. We'll be coming right back after the break.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. Hopefully you can hear me here. Got a little bit of technical difficulties. We're on. Okay, perfect. We got the S&Ps right now up 16 points, folks. We got 11 minutes to go until the opening bell. Jumping back to a 15-minute chart right now, you can see catching a little bit of a bid as we dive down. Come. Little Tommy, my son, he's running around the house, and maybe he just unplugged my internet cord. We'll find out, but my computer's not showing an internet cord plugged in anymore. I'm on Wi-Fi, and we'll find out why that's the case at the break coming up. Okay, S&Ps, as I said, on a minute chart, 8:30, we got the non-farm payrolls number. You're at 45.50. We'll call it ballpark. You trade down to 45.38. Since then, we're back to 45.46 right now. In the S&Ps. Yeah, I'm not sure. Hopefully you guys can hear me. Maybe we're just having some problems. We're getting a lot of bad weather out here in the middle of Florida right now. Some big storms, some rain, but we can use it. But hopefully you're able to hear me if my producer can just keep me updated on that. All right, let's jump around to some of the equities that are moving this morning. Let's see. What was I just looking at that I wanted to take a look at? We hear you. Perfect. Was it Walmart? I think it might have been. No, it was not Walmart. I was going to look at McDonald's. Now we'll look at Walmart as well. These are two stocks that I do have in my newsletter, folks, Rocket Equities and Options. They're two mainstays, of course, in a time when we have some severe market volatility. Growth stocks may be coming at you. Two decent dividend stocks, in my opinion. Now, what I wanted to point out here is a little area of confluence. If you're not familiar with confluence, folks, learned this one from my dad out there, but Fibonacci, in the world of Fibonacci, it is the coinciding area of two different trends, okay? Now, what I've tried to do on this chart is separate it as best I could. First, what I'm going to do is I'm going to isolate. You have the trend going from March of 2020, okay? We'll call it the COVID lows of 124. You rise up to 271 and we pull back a bit. Now, on a Fibonacci basis, the run from 124 up to the highs of 271, you have a 382 area that sits at about 215. You see where we are on that chart, and what I've done is I've outlined this box. Towards the lower portion of that box sits on the 382, okay? Then what you do is you zoom in on the shorter trend. Now, the run since March 1st of a year ago, okay? So we're backing up about the last year. Now, McDonald's trades higher. You consolidate a bit for the end of 2020. Another run begins, okay, in March of 2021. If you zoom in on that action, that run begins at about 202, call it 200, whatever you want, up to 271. The Fibonacci lines on that trend are here in a more purple, okay? Now, what's lined up here, which is pretty cool, okay, is 618 is the top portion, okay? And what I've done here is I have the 618 of one trend and the 382 of another trend, okay? And what I was looking at is maybe you get an area. Now, it's especially great, folks, when you have an area that like they line up to the same exact little dotted line, okay? The 382 and the 618 are an exact area. But what I want to point out on this one, okay, is that I talked about in my newsletter at the time when it was coming down this area. You have an area of confluence from the area of the 618 to the area of the 382, zooming in on this chart, that is a price level on McDonald's of about 216 to 228. What does McDonald's do? On the day of February 7th, you trade down to 217.68. You get a couple tails below that level. The bodies almost line up exactly at the 618, and since then we've bounced to 247. All right, I just wanted to go over it because it was a great area. When you see that on your chart, okay, it doesn't mean it's going to work every time, folks, all right? But if you're looking to get in equity, and you see these types of areas forming of confluence from two different trends, right, of those areas. You have a 618 and a 382. Those areas put an area of confluence from about 216 to 228. Maybe that's where you start looking at getting into McDonald's. In this instance, it would have worked out. Doesn't mean it's always the case, folks, but that was kind of a perfect example of how confluence lines up. Two different trend areas on a chart. You have a longer term trend pulling back to the 382. You have a shorter term trend pulling back to the 618. You put an area in between those two zones. That's your area of confluence. Check that out sometimes. Pretty cool area of how that lined up. All right, back to Walmart since I had taken a look. All right, now Walmart, another strong dividend stock, folks. Walmart, getting a little dicey though. You are coming up to the top of this consolidation area, and you have been in this consolidation area pushing a year and a half on Walmart. That is quite a consolidation, man. But all things considered, the dividend yield you're talking about here, the context of the market cap of this company, okay? With the reach that Walmart has, okay, and they are a dividend company, but you're talking about a company valued at about $400 billion, okay? They have a PE at 29, so that's quite a PE for a company like this, okay? But again, that is a PE based on some of their earnings, which have been hit a little bit recently. And so the PE might be a little bit more reasonable, but no matter what it is, okay, you're talking about a company valued at $400 billion that reaches any consumer in the U.S. I think I heard the stat 90 and 95% of people in the United States live within 10 miles of a Walmart. The number of people that they touch on a monthly basis in terms of customers, it's amazing when you think about the number of customers just on a pure level of people they reach, and all of that provides some type of opportunity. I mean, the rumors are always out there, the Bank of Walmart, right? Maybe they get into some type of financial services for the underbanked that they are so familiar with working with, as in many people on the lower spectrum of the income spectrum, they don't have bank accounts. They end up paying inordinate amount of fees on a percentage basis when you don't have a bank account. They pay to cash their check, right? They pay to write a check, whatever it is. That's an opportunity that Walmart has, folks. It always will be. They're a strong company. If there's anybody that can compete with Amazon, it's going to be Walmart. And they're not there yet. They got a long way to go. But at $400 billion, I'm more comfortable when you have rising yields in that type of environment. Now, boy, part of the reason why they've struggled is they got some issues with wages. They got some issues with earnings. When you got to pay the number of people that they have higher wages, Amazon is in a very fortunate position that they can take the profits they make from AWS, prop up the Amazon retail business for the time being while we get over this hump. Walmart doesn't have that ability. So if you're in Walmart, long term, I think it's a great equity. Short term, watch out as it's coming up to an area that it's traded to 3 previous times in the last year and a half. And each time it's traded there, it's done come back to 135 for Walmart. Right now, this morning, you're looking to open about 50 cents in the positive for Walmart shares. All right, let's jump around to some of the FANG stocks as we come into the opening bell this morning. You got Apple trading lower. Looks like Apple, I was looking up this morning because the whole market's higher. NASDAQ 100 is up 39 points right now. You got the other tech stocks barely higher. You got Apple down $1. And they just dropped from J.P. Morgan's, what was it? Let's get the exact terminology here. Their focus list. That's the deal. Removing it from the analyst focus list over concerns about consumer spending might be hitting Apple. If consumer spending is going to hit Apple, it's going to hit everybody, folks. But nonetheless, Apple looking to open $1 lower. Stay tuned, folks. Should be an interesting opening. It's Friday. We're right back in 3 minutes.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open right now, and you're looking at an S&P positive by about 7 points on the open right now. That's about 0.2%. You get the NASDAQ 100 positive by 32, Dow positive by 67, and the Russell positive by 12. Russell catching a little bit of a pop, but man, in the context of where we've been the last couple of days, I mean, the S&P, folks, you're talking about almost 100 points from where we were trading at on Tuesday, let alone early yesterday morning, 3:30 a.m., you were up at 46.12. So you're still talking about 70 points from that price level of just where we were yesterday. All the markets in the green, but a small bounce in terms of where we've been. Bitcoin, a little bit lower yesterday. We dipped below 45,000. We're back to 45,505. Crude market back under $100. We were under $100 on Tuesday. You make it back above 108. We were at 104 yesterday. This morning, you got a 97 handle, just that quick. We got a 101 handle, and just like that, we're under $100 on crude. Gold contract pulling back a bit, negative $22 to 19.31, and we jump to notes and bonds right now. You're getting lower price and higher yield coming at you. We're off more than a full point in the 10-year right now. 30-year off almost 2 full points to 148.03. Jumping back, so I was talking about Walmart, and they were talking about in the den. Yeah, 29 PE is pretty spicy for Walmart, man. You're up 0.2% right now. The one thing I will say is I think that might be a forward PE. They might be coming in at a PE closer to 22. I'm seeing it on part of the area. The one thing I will say, just pulling up, and this is just random Googling of what's going on here. This is updated recently. I think this is talking about their next quarter. On a quarterly basis, Walmart's pulling in $138 billion on a quarterly basis, okay? On a yearly basis, they're pulling in $589 billion, okay? Next financial year, Walmart is looking for $610 billion. So they're trading at 2/3 times sales. All right. Sometimes companies trade at like 30 times sales, right? Growth companies, rightfully so sometimes. All right. Walmart's trading at 2/3 times sales. Now, the business that they're in, they don't make a lot of money on those sales, right? Their margins are low because they're pushing out products at the lowest price that they can to be the bottom, the cheapest option out there for the mass consumer. They're making small margins, but they're doing big numbers in sales. But boy, that kind of sums it up. $620 billion, and still they're trading at a P of that level. Walmart had a net margin of 2.39% and a return on equity of 20.42%. Revenue, $152.9 billion during the quarter. Strong numbers, man. When you look at that, and yeah, you're dealing with a PE of 22 to 29. But you're dealing with a market cap that I find more attractive when the market risks right now of some of these growth stocks. It makes sense, in my opinion, to have at least some exposure to some of these good companies. They were talking about in the den yesterday. Can't remember who was saying it, but it caught my eye because it's a great point. You're looking for dividend plays, man. Some of these energy stocks may be a decent play. Now, yes, you have some of these stocks getting a little lofty at crude at $100. Let's just pull them up for a second. Chevron, 163. Not sure how you get in right now, but you got to pull back. Maybe that's where you want to be. ExxonMobil up to 82 from 60 to start the year. All the talk recently about Oxy and Buffett, right? Getting into Oxy. Maybe that's one of his next big positions. I was reading a nice article this week from Bloomberg talking about maybe that's the next big play is Oxy. We'll see, but that's led to some speculation, which has the stock trading from 26 up to 56 already on that equity. Now, here's what I'll say. I put this thing on a long-term chart. Not surprising to see why Buffett may be looking to Oxy at a price level of about the 30s to initiate that position. I think he came in the year 2020 also with a big investment to keep them afloat during the pandemic. And yeah, you look where this thing has been, folks. He was getting in outside of where this thing came into the year 2022, excuse me. You're talking about prices that Oxy hadn't seen since basically 2005, beginning of. Quite the move there. All right, let's jump back to some of these markets. As they give it back a bit, you get the NASDAQ 100 barely holding on to those gains. There's your volatility on the open. We're under 15,000, 14,888. We jump over to Apple, as I said. AAPL pulled from JP Morgan's list, barely negative right now. And all the markets, looks like we're going to turn red right now. S&P's barely positive by a couple points. NASDAQ 100 just positive by 13. All right. Okay, jumping back to some of the other headlines I've got pulled up here. Let's jump around the game. So we've done GameStop, we've done Apple, BlackBerry, blast from the past. Unexpected profit for the latest quarter. They are now a software company. Revenue below analyst expectations. Revenue miss as growth in its cybersecurity unit flattened. BB, huh? I'm not taking a look at this one in a while. BB, BlackBerry, watch out, down 10%. Yeah, I wouldn't be touching this thing at all. BlackBerry, 10%. There's better plays out there, folks, than putting that in. Win, they're lower as well. Citi upgraded to a buy from neutral. No, they're higher. Excuse me. Buy from neutral, increasing clarity over regulations and licenses in Macau, as well as an attractive valuation. So, Macau, huh? Well, here's one way to gain some exposure to China, folks, without getting right into the Chinese stocks. Our man Kevin Hincks has talked about this many times. Early on, when the Chinese stocks really started cascading lower, yeah, you get a little bit of a bounce on win on that one. You put this thing back on a 3-year weekly to see the COVID highs, the COVID lows, down to $35. Early last year, we're up to 140. These stocks live and die on China sometimes, folks. No matter what's going on in Vegas, the amount of money that they can do in gambling in China, they can live and die by all of that. I got to get that chart one time that talked about the gambling, pure gambling revenue, gambling numbers in Macau versus Vegas. It's literally off the charts in terms of the type of gaming revenue that they do. Vegas has turned into a great place that you can spend some time in without even gambling, which is pretty cool. I tell people all the time, I'm very big into poker. I like gambling as long as I'm gambling on things that I can find an edge in, as in a positive expectation. Yeah, I'll play a little blackjack if I don't mind, losing $100 for the night or something like that. But it's no fun to be playing a game that you're going to lose in the long term, folks. What's the fun in that, right? The fun is playing a game that you're going to win in the long term and being able to handle those short-term swings that you're always going to endure when you're in a risk game. It's pretty similar to trading. But I talk to people about Vegas, and they say, I don't like to gamble. I say, get out there anyway. And I haven't been there a while myself now. Just even as a family, whether you talk about the hotels, the pools, the restaurants, the sights to see, it is a fun time. A little bit hot in the summer, but it's a dry heat, as they say, a dry heat. What else we got here? Let's see, NEO. They delivered 10,000 vehicles in March. They're a little bit higher today. Hycroft Mining, the AMC stock that the gold company, that's going to be bought by AMC. They're a little bit higher after they, I guess, released their earnings. All right, let's jump around to what else we have going on here. China, this one. So I don't believe this one for a second, folks. China weighs giving U.S. full access to audits of most firms. Don't imagine that happening as well. The SEC chief doubts imminent deal with CSRC on audit talks. Folks, China does not want the U.S. Auditing all of these companies. Not even close. They're preparing to give U.S. regulators full access to auditing reports of the majority of 200-plus companies listed in New York as soon as mid this year, making a rare concession to prevent further decoupling between the world's two largest economies. Well, we'll see how that one plays out, because that is quite a statement, and I imagine there's a lot going on in those companies there. We'll see. Stay tuned, folks. Be right back after the break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the markets in positive territory, but barely. You're looking at an S&P right now coming down to near session lows. We're positive by 3 points on the session, and man, we're talking about right near the lows of yesterday. You are positive, but we're only positive by a couple ticks after trading down about 70 points from early yesterday action to where we closed out the action. How about this, folks? So I wanted to show it. Got on my birthday. My beautiful fiance giving me a lovely gift among many others. Pretty cool, right? TFNN.com, educating investors. And I think it's going to cycle through colors. Look at that, right? We're going to have to get more of these. We like that. Look at that. So I got a nice little, I'm going to figure out where I put it in my office, find a spot on my desk. I thought I'd show that. Pretty cool. What you can do. Maybe we'll create a couple of those with some graphics and something like that. But nonetheless, got to love it, right? White tends to look the best. We'll see. We're going to put it off camera for right now. All right, S&P is positive by 4. Let's jump around to other headlines I had pulled up here. The dominance of tech stocks in the S&P 500 is set to shrink next year. So the S&P Dow Jones and MSCI announced changes in their Thursday statement. Bloomberg misspelling the word Thursday, but that's okay. The dominance of tech stocks in the S&P 500 set to shrink next year after the index's overseer announced revisions that will reclassify the sectors of some major shares. So payment processing companies, currently classified as tech firms, are poised to join the financial sector, while other tech names providing outsourcing or human resources support will be classified as industrial stocks. The U.S. Dow Jones Indices and the MSCI said in a joint statement Thursday, full list of the companies affected expected to be released by December and implemented by March of 2023. 11 months from now, folks, there's going to be an adjustment. The adjustment means the likes of Visa, PayPal, MasterCard will shift from tech to the finance sector, according to one head of research at ETF Trends. Major impact for the sector ETFs that have hefty exposure to these companies. The regrouping will make tech exchange-traded funds such as the $50.7 billion Vanguard Information Technology ETF, VGT, and they got another one out there that's the Technology Spider Fund, XLK, more concentrated, and financial ETFs, you got the XLF, more diversified. For instance, as of Thursday's close, Visa was the 4th biggest holding of VGT. MasterCard was the 5th. About 3.6% and 3% of the XLK was invested in those two companies, respectively. The tech sector overall represents about 28% of the S&P 500, more than the weighting of the healthcare and consumer discretionary sectors combined. So you're going to see a little shakeup. We're not going to get the details till December. That shakeup's not going to happen until next March. But nonetheless, it'll be interesting to see how that plays out going forward. Speaking of payment processors, this one was interesting as well. Marijuana, cannabis in the press lately. The House legalization, and it's saying not so quick, man. Canopy, they're catching a little bit of a pop today. But boy, you go back just to last week. There's the acceleration on the scheduled hearing that took place this week, I believe, already. But boy, these pot stocks, man, they are really struggling to find a bid. Yeah, you're up 4.7% today, man, but you're just back to where you were yesterday on these stocks. You're at about $8. But this is one, and this is a reason why, folks, that really this industry needs regulation and legalization, because it's heavily operated off of cash, which is a problem for obvious reasons in terms of the headaches it causes, the extra expenses it causes, and then just the pure risk of bad things happening that it causes, having that much pure cash sitting around that, of course, people may go after. But it's amazing when you talk about the numbers. So one of the things, when you go into a cannabis dispensary, you cannot use a credit card. Visa and MasterCard. Massachusetts is an example. Now, Massachusetts, they have recreational as well as medicinal that is legal. And here's what I'll say. If you're going to make it legal recreationally, Massachusetts has allowed people to actually just grow a plant, which is the obvious way to go, folks. If you make it legal for just recreation, it's a plant. It makes no sense when people are making it legal through recreational and then saying you still got to go buy it from a company that's regulated to get ours, all right? Massachusetts, you can actually grow your own plants. It's a plant. There's no reason. If it's deemed legal, there's no reason why we should have to pay the toll to people up and down the line. Nonetheless, I digress. You cannot use a credit card. But what you can do is you can use your ATM card and take out cash. But what they figured out how to do is they have cashless ATMs. You're basically running your debit card. You don't get money out. The system kind of tricks the bank to saying they took that money out, and then that money's debited from your debit account. The transaction costs go through as well. $7 billion they're talking about. That is quite one before. Quite a one before. And this, so they talk about the McDonald's in Great Barrington, Massachusetts. Why were they so busy? Well, they were right next to a marijuana shop, and they had hungry customers. What managers didn't realize on a Saturday afternoon in December was that the payment processing technology at this dispensary was missing a purchase of pear-flavored THC chews as a withdrawal from an ATM at the McDonald's joint's address. They have a number of stuff that goes in here, but bottom line is you can't use cash. They have facilitated the way for you to basically use your debit card in the similar manner as an ATM transaction. But, you know, you're talking about, and here they go. Those sales could generate more than $500 million in fees for payment processors based on the average purchase sizes in terms of how much money. Industry participants estimate more than 1/4 of the $28 billion in U.S. dispensary sales forecast this year by market research may be disguised as cashless ATMs. That is $7 billion with a B dollars running through those cashless ATMs, and you're not supposed to be able to use them. Visa said in a December 2nd memo to clients that it was aware of the scheme, okay? And a spokesman for the card company declined to elaborate, but said in a statement that transactions in the U.S. involving the purchase or trade of marijuana are not permitted on the Visa network until such a time as federal law allows. So, I mean, you could see how so quickly that even something like this, right? If they clamp it down, they stop those payments, which I bet they could if they wanted to, okay? $7 billion could literally go up in smoke, as they say. The stores would rather take plastic than cash. I don't, you know, the amount of cash that they'd have to be storing, folks. You need a Fort Knox with a bank in there. Customers spend as much as 20% more in the dispensaries, avoid the theft risks on there. It's a makeshift industry right now, and when you're talking about $30 billion in that industry, you're talking about a bunch of cash. Hopefully, they fix some of this by passing some of those legislative agendas to take it off, because there's no reason in these states, folks. We've kind of crossed the line. I think it's something like 36 states now or something like that, especially when you talk about medicinal, because even medicinal, you can't do it. In Florida, they have medicinal. You cannot pay with a Visa card for medicinal marijuana, even in the states that is deemed medicinal. So Nonetheless, we'll see how that plays out, but it is a big, big number, and it's dangerous when you think about the impact it has with all that cash flying around, and just the impact of businesses with employees, et cetera, right? I mean, Visa, MasterCard, they clamped that down. $7 billion, that's supporting jobs, folks, okay? Everyone likes to talk about jobs. $7 billion in that industry. There are a lot of people that are employed throughout that industry. Canopy, giving back some of the gains. Those stocks, we'll see if they're there. We do have some Canopy in my newsletter, Rocket Equities and Options. Fortunate to get into it last week before that acceleration. Looking for a pop. We'll see where we get into that and get out of it. We'll stay tuned. Folks, we got one. NASDAQ negative. S&P's positive by 5. We'll be right back. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets in negative territory right now, putting things back on a 5-minute chart. You got the S&Ps. Did we make it below yesterday's low? We get right down to that price point. Yesterday's low, 45.2625, and we just get to 45.2650 within a quarter of a point of that low. We're basically right there. S&P is negative, NASDAQ 100 negative by 48. You get the Dow hanging on to gains just by 35 points. We jump to notes and bonds. The trend somewhat continuing right now. You got the 10-year down a full point right near the lows. We're talking about a yield right now of 2.44%. The yield on the 10-year. All right, let's see. Where else was I jumping to? One more before I talk about. This is the one thing I wanted to talk about as well. One of my friends was sharing this, not familiar with who this is tweeting, but for all the talk about the permanent drop in labor force, okay, because there has been a lot of talk about people pulling them out of the labor force, we are now just 174,000 people below its pre-pandemic levels, with household employment only 408,000 short of the February 2020 level. So that is from the jobs number this morning. What I will say is we got 2 years of time there that we should have seen a rise, right? So we're back to February 2020. You should see just the natural rise of progression of 2 years of population growth, people coming into the workforce, et cetera. But nonetheless, pretty strong numbers there when you look where we are, just about back to pre-pandemic levels when so many people had pulled themselves out of the market. And even at those numbers, we got an unemployment rate of 3.6%. But guess what? That's part of the reason why the market's saying, hey, we have a very, very strong labor market, and the Fed is going to be able to bring it because the Fed knows that the labor market and the economy overall is so healthy right now, even if the market is not going to like 50 basis points, the market needs 50 basis points. Because why? Because we got inflation that is out of control, folks. Now, we're going to get CPI in about a week and a half. And when that number comes out, it's going to be a huge number. But guess what? As we go the next 3 or 6 months forward, that's where things are going to become interesting, folks, because we are going to be dealing with some comp numbers that are pretty lofty for the CPI number. We'll see where they go from there. But right now, hiking is the course. The market knows it. S&P is a little lower. We're at about 45.28 right now. Stay tuned. Up next. Live programming all day, folks. It's Friday. Stay tuned. Basil's up next.